Now that we've seen a little bit of a move up in the market, I think it's okay to start talking about wider moves up in the macro trend. Obviously, we are so sensitive to price action that just simply from going, from 124 up to, 130 on Ethereum, going from 36 up to 3,800 on Bitcoin, these very small price movements have allowed us to now be socially acceptable if we want to talk about high range targets. So in this video, I want to cover a chart that a VIP member sent me, which is this one. Now I'm going to break it down each and every single aspect for you. I'm going to tell you what I think about it, how likely these things are to play out to me. And yeah, it's a very, very good one. So let's get straight into it, not waste any more time on this one. And so the first thing that we need to cover are Elliott wave patterns, and this is something that I don't cover very much on my channel just because I haven't personally had much success using them. I found them really difficult to use simply because they are incredibly subjective. I'm going to show you why right now. Now the first thing about Elliott wave theory, for those who don't know, is that it says that when we're in a trend, we're going to have 5 waves within the trend, and that is going to complete the trend. And usually Elliott waves like this are followed up by ABC correctional waves, and these are also part of the Elliott wave theory. So we might have wave A going up to the previous resistance established at 0.4, and then we might say retrace down to the bottom, the support at 0.3, and then perhaps all the way up to 0.2. Now, one thing you've already noticed is that this pattern also forms an inverse head and shoulders, and so this is really a concoction of all of the indicators or tools that I don't like to use. It is simply because there's so much subjectivity to all of these things. I can't even find it. It doesn't even matter. You know how inverse head and shoulders work. I'll just paint it out for you real quick. We get the head over there. We get the shoulder, the head, and then the other shoulder. And because we've tested a low 1, 2, 3 times, we've had rejections at each of these 3 lows. The idea is that we're gonna rocket on upwards. Very, very subjective because we can draw these head and shoulders patterns everywhere. And for the same thing with these correctional waves and regular Elliott wave impulse waves, we can draw them almost anywhere. I can show you a quick little example over here. If we go over to the impulse wave once again, wave 1 down up to 2, and you could potentially draw wave 3 to this low, and then wave 4 up to this high, and then wave 5 down. Does it really make sense? I would say quite strongly no. You could have chosen this peak for wave 4, you could have chosen this low for wave 3, this peak for wave 4, you may have chosen this low for wave 5. It's really, really subjective where you draw these things, and it's hard to say which one is correct. That's why I don't like this tool in particular, but this person who did share this chart with me does have a very, very good chart going, and that's why I am talking about it today, guys. I'm only filtering out the best patterns that I'm seeing out of everything that my TA produces, and of course what people send to me through Telegram and Twitter and the like. So this person's Elliott wave starts from the top that we established over at 6K, and this is where the downtrend started. So we have wave 1 going down to what became the 618 support on this retracement. I'm going to talk to you about the Fibonacci here as well. Very, very interesting points there to be made. It drops down to the first point, and so this is wave 1 completed. We retrace up to 0.2. Now, I think this is fair. It's still a little bit subjective. It could have been that wave 1 goes all the way down to this peak, and then wave 2 goes up to, this low, and wave 2 goes up to this peak. Perhaps wave 3 ends over here, and wave 4 starts over here. It could have been this way, but again, like I said, I think this person drew it as accurately as it was possible, and really it wasn't very easy. So let's just go with it. And so we get wave 1 going like this, up to 2, down to 3, wave 4, and 5. So it's actually quite accurate in terms of how these patterns should play out. Can I thicken this a little bit? Yes, I can. And so we can see this a little bit clearer now. Now, typically what we're going to have is a pretty nasty drop on wave 1, followed by a shallow recovery on wave 2. Usually nothing very, very interesting. Now, you will have noticed this with the kind of demo that I showed you back over here, where wave 2, actually, I didn't do this correctly. Wave 2 will be a shallow, what's the word? A shallow correction to the upside, and then it will be followed by a much nastier drop in wave 3. You can see with this drop that wave 1 was pretty bad, but wave 3 was way worse. So this works. And so we've got wave 4. Wave 4 is the stronger pullback to the upside, but still obviously not ending the trend. And then we have wave 5. I think this is pretty fair. I don't think it could have been drawn any better than this. Now moving over, we have the ABC correctional wave, and this is much the same up to wave A, to B, and then to C, which would be around, sorry, I massively overshot that, which will be around about here. Now, we've plotted the Elliott wave, in both cases here, the impulse wave and the correctional wave. Now, we are still on the trajectory for this ABC correctional wave. If we look at how this trend has been playing out, we are paying attention to the much more macro moves. So using the daily chart does make a little bit more sense for this example. And we can see that the overall trend, even though we have been a little bit shaky when we ended up testing support twice at times that perhaps we shouldn't have, this overall short-term uptrend is intact. I told you this in my last video where I thought that even though, you know, I mean, we've been quite hesitant, and if we're going to count this low as the uptrend support for this short-term uptrend, we have very much breached it, and I showed you that that would have been a valid conclusion to draw because this is the only way you can draw horizontal support in this trend. So it could be the case that we've now set a lower low over here, but let's ignore it. Let's in this case only pay attention to evidence that's convenient, and by the way, that is how the majority of people use things like Elliott waves, and that's why I don't like to use them, but it's still valid. And so we have a nice move up. Wave A is very clear. Wave B is very clear as well. There's very little ambiguity in this case. Wave C a little bit shaky, but it can still work. And so we're looking at a move to the upside. Now let's draw our Fibonacci on, and this part is very, very important. We're going to be looking at how the Fibonacci retraces. Now, the way I typically draw Fibonacci retracements is going from the bottom to the top of the trend. This way, if we hide all of these, okay, that was stupid. If we kind of zoom into the Fibonacci here, we can see that I drew this from the bottom to the top of the trend, and we retraced down to the 618 level. So within this trend, we move down. Let's get the paintbrush out real quick. Within this trend, we move down to the 618 level, and so this was a 61.8 correction, 61.8% correction of the move to the upside. That means if this was a 10 centimeter long car, we would have cut this car by 6.18 centimeters. Yeah, and that would leave us with a 3.82 centimeter long car. No idea where that came from, but let's just roll with it. Roll with it. That was a good pun. I'm an idiot. Okay, let's move on. So we've got the Fibonacci retracement done there. I've shown you how I like to draw it, but this is where we're retracing from a downtrend, or rather from an uptrend. Now, in this case, we're actually retracing from the upside, and so drawing this Fibonacci is also a little bit subjective, but I'm going to go with the same height that this person drew it at. And so we can draw a Fibonacci from this peak and right down to the bottom, and what we quite magically see is that the 618 level in this case, now bearing in mind this is retracing from downwards to the upside, in this case the car has gotten longer by 6.18 centimeters, don't ask me how, and so we retrace by 61.8% of that rally to the downside. We retrace upwards. It lines up amazingly with where we hit a temporary low during our second capitulation event, and then with these wave C corrections, we typically have prices hitting the 1.68 line. I mean, this should be the 1.68 line. It's 0.618 because of how I drawn it. But we typically see the wave C wave going up to the 618 level. Now here's where the rest of analysis comes in, because you guys know I've been talking to you about the possibilities of seeing the $4,000 range since we were way down over here. I was calling for a rise back at this level, telling you that I thought we'd end up hitting the $4,000 level, and also when we were down over here. So this one was a pretty nice call. This is one of the messages that I got from a VIP member who mentioned that I mean, this was from yesterday or something, mentioned that he felt like a kid in a candy store going through the VIP library. Guys, the VIP library is where I put in every single historic VIP video. The VIP videos are a complete next level to the analysis that you're seeing in these videos. It is all exclusive content, and it's all backed up and stored right there for your immense viewing pleasure. If you want to get in on VIP, hit up the first link in the description down below. It's free. There's no sign up process. It'll take you less than 30 seconds to get in, and then click on the @4flies at the bottom of any post and send me a message, ask me how to join VIP. While we're on the topic of this, actually, I want to shout out my Twitter page, and specifically this I tweet too much. Where is this? This post, I've just lost it. There it is. Which, if you have retweeted, you have a chance at winning a free membership with VIP. And of course, if you're a current member and you retweet this, you'll get paid back the fee that you paid when joining. So, well, for 1 month if you joined on longer than that. And so, if you want a chance of winning the VIP membership for free, go ahead and retweet this tweet. It's going to be in the description, the second link in the description. Click on that. Retweet this post, shoot me a follow, like the post as well. That's how you'll get entered. It will be chosen randomly, and yeah, good luck to you if you have done that. Of course, if you do join VIP after you do this, you still have the chances of getting a refund for 1 month. So pretty cool there. If you want to be like this guy and enjoy all the amazing content, you know where to find it. Now, back to Bitcoin. What chart is this? Okay, right. Back to Bitcoin. If we look and zoom out onto the 618 level, it lines up perfectly with where we previously bottomed out. And if we throw on the Ichimoku cloud now, looking at the daily, it also lines up very nicely with where we have resistance. I've been talking to you a lot about how if the bottom of the cloud isn't rejected, doesn't reject price action, and if we're trading within the cloud, we have a better chance of getting rejected at the top of the cloud. We can see this where we would reject it at the bottom of the cloud over here, the bottom of the cloud over here, nearly the top over here. This is just how the Ichimoku cloud typically acts, and so it lines up really nicely as well. We have Ichimoku resistance right now. It is running out, by the way. It'll only be valid for about the next week, less than that now. But we do have resistance that runs us up to a price of 4,900, and of course this the real TA here, this wave C ends at about the $5,000 level. I'm guessing this is about 5,150, but it's the same relative zone, and so it lines up really well. If we want to again only pay attention to analysis that fits in with our own theories and what's convenient to us, this is a perfect example of where the Ichimoku lines up nicely with resistance, which lines up nicely with the wave C correction, which lines up nicely with the 618 resistance, and it lines up nicely with where we initially bottomed out for a short while during this capitulation event. It's still mind-blowing to me that when we were down here, people thought we bottomed out, by the way. I mean, this was insane. I was telling you guys that if we did drop from 6K, we would be going way down into the $4,000 range at least, and potentially into the 3,000s. Why anyone thought it would stop over here is way beyond me. But, you know, I think it is quite clear, obviously, if we just take some more hindsight analysis on this, we only consolidated at this range for about 4 days, and then the dump continued. So, you know, even though we did kind of float around at this range, there was so much bearish pressure that actually the majority of the market knew we were going down. So if you thought we would have bottomed out over here, you were actually in the minority in this case. And that's an example where being in the majority for the market can actually be very profitable. It's just about making sure that you're in that majority before everyone else, so that way you can profit from it. But anyway, that's a completely different video altogether. I've broken down for you this Elliott wave impulse theory with the ABC correction to the upside. It still looks likely to me with the Ichimoku resistance lining up very nicely over here. And of course, because we have had a slight uptick in price action over the past kind of 48 hours, that is kind of renewing a little bit of hope that we could rise on higher. Now, for some more short-term analysis, really, you know, we look at the actual Bitcoin chart at the moment with the resistance lines on this chart. You know, we've hit relative resistance over here. That I don't have a line for this, but you know, on Ethereum, for example, we have exactly hit resistance. Obviously, Ethereum is going to rise a little bit better than Bitcoin, and of course, fall better than Bitcoin. So that's why we have had a lot of fun trading that in VIP. This guy will probably be enjoying some of those gains, hopefully, in the coming days and weeks. So very excited for that, seeing as though we did top out at resistance over here, and we have established an area of resistance right here, right at the current level for Bitcoin. It does look bearish. Now, the final note I want to make is with regards to the actual 618 level, and I can't believe I didn't say this already, but it goes without saying that the 618 level is usually magnetic to price action. We have either the 382 level or the 618 level that typically see the most love from price action, especially in crypto. That's why I like to say that they are magnetic to price action. And of course, we have heavy resistance at the 382 level. This is right at the $4,400 resistance area. So that's the resistance that we established as support. And also resistance during this capitulation event, and so that is going to be a little bit nasty to break, and seeing as though we are struggling a lot with 4.2k, you know, if we could break 4.2, I don't know, we could end up topping out at 4.4. Like I said, it does line up with a little bit of pre-existing resistance on the Fibonacci, but if this is breached, the other really valid thing to point out is that beyond this level, there's no resistance on this chart until we hit the $5,000 range. And in fact, until we hit 5,500, there's basically no resistance beyond this 382 level. So the 618 level really does look quite magnetic to, that's hard to say. The 618 level really does look quite magnetic to price action. And so in this case, it is just going to be a case of waiting to see how this more macro trend plays out. So that's a breakdown of this chart. Let me know if you have enjoyed this video. And of course, do make sure to hit up the second link in the description down below and retweet this little tweet over here. And then click on follow and also like the post to be entered in the giveaway. Thank you very much.